Hi everyone, I'm Paul and welcome to my market update for the 10th of August 2022. It's been an interesting couple of weeks in markets. We had the Fed raise rates by 75 basis points and most central banks around the world quickly followed suit. The US economy has reported 2 consecutive negative GDP prints, which means it's officially in a recession. And so what did markets do on the back of that and all this macro overhang that we have with the Ukraine and so on? Well, of course they rallied. So the difficulty as traders is to try and anticipate what markets are going to do. Markets are generally forward looking, so recent events are generally considered priced in. But looking at what's happening in this macro environment at the moment, seeing the markets go up doesn't really make sense. And it's very difficult to interpret, really what's going on and to try and understand exactly what factors are driving markets at the moment. So for me, the simplest thing to do is to just pare everything back and to look at the dollar index or the DXY to give me a single source of truth to help anticipate or predict what markets might be about to do. So the best place to start is with a monthly view or a monthly chart of the dollar index or the DXY. So you can see from mid last year, so 2021, that the DXY has rallied really hard. So you can see this move here has been quite strong, and you can see we only have a couple of down close candles in that whole move. And so the other thing to note is these down close candles have acted like support. So all of these pullbacks have been bought, and you can see that on a closing basis, these down close candles haven't been breached. And the other thing that's worth noting is you can see we have these relative equal highs here, which were breached by this move. Additionally, we can see that this move has gone up into this bearish fair value gap here. You can see we didn't quite take out the high up here, but we did trade right up into this imbalance and into this swing low just here. And that was before it's pulled back, but you can see now that we're into the next monthly candle, that uptrend is still continuing. So the next question to ask is, where will we go from here and where might we think the DXY might go? So my view is that by the end of the year, I think we'll see the DXY trade back up into this imbalance and sort of tag this swing low just here. So trade right up into this imbalance, not necessarily rebalance that imbalance, but certainly trade up into it. And I think we'll see that move before the end of the year. So I've just marked what would be the end of 2022 here. So what I'm expecting is a drive up into this zone here towards the end of the year before a pullback as we go into 2023. Now, there's a couple of reasons why I think this. So if we look at the recent range that the DXY's been trading in, and this is one that we've been sitting in for a number of years now. So if we just draw this out, you can see we've traded up and through the range pretty much around the midpoint, and this particular move from the base of the range has breached the top of the range, and you can see we've now traded up and away from it. So this doesn't look like a deviation at the moment. This looks like this will be a continuation of that move. And if we look at the previous break of the range, so from when we were trading down here prior to the breakout of the range, you can sort of see similar behavior where we trade up and down into the range, oscillating around the midpoint before we had this big drive. And you can see this is quite typical of the DXY, where it's broken out of the range, it just makes one break and it moves away. So that's pretty much what's happened there. If we go out even a broader macro view and we look at the range over almost the last 2 decades, and we just draw this out, so you can see if this is our whole range over this whole period, you can see our midpoint here matches fairly closely with this smaller range that we've painted just in the last few years. So in terms of the way you trade ranges generally, you wouldn't want to be taking a position in the midpoint. So the way we trade ranges generally is you want to trade from one end of the range obviously to the other. So you want to go long at the base of the range or short at the top of the range, and you generally don't want to take a position in the middle of the range. If we take this as a longer term range here over this 2 decades, you can see we've traded right down to the base into the midpoint of the range again, and now we're starting to trade towards the top of the range. So this also lends, I guess, a bit more credence to my hypothesis that the DXY is going to trade up towards this sort of top quartile of the range and into this imbalance before we get a pullback. And I think that pullback will come back into this range that we've been trading in for the last few years. So this would kind of be like one quite big deviation. So if we zoom in now to the daily chart for the DXY, you can see we have this bullish fair value gap that's formed just here, and you can see the market sort of traded up into that imbalance and has then traded back down, and it's completely rebalanced that fair value gap there, and we're just now sort of grinding away at the top ridge of that fair value gap, and it's a bit unclear in terms of where we're going to go from here. We could trade down into one of these order blocks either here or down here. There's another bullish fair value gap just down here as well, or we could potentially trade back up towards this high and then make it a more of a push up towards those other imbalances that I showed on the monthlies. So it's a bit difficult right from here to really call where the draw on liquidity is most likely to be. We're kind of in an in-between zone. You would have to think on balance the trend has been so strong that this is just going to be a pullback before another move, but we'll need to see a little bit more price action before we can make that call with more conviction. Now the other thing that I think is just worth noting as we go through some of the other charts is where the Dixie peaked here. So you can see that was on the 14th of July, and then it's obviously pulled back from this high right down to here. So if we just measure that out, you can see that that's about a bit under 4%. So that move from the high there to there, it's about 4%, but we're still sitting over that $100 mark on the dollar index. So if we switch over to our legacy markets first, we'll take a look at the ES or the S&P first. You can see the S&P broke really strongly out of this range after this initial pullback. You can see it traded into the midpoint, broke through the range, bounced off the top again before rallying quite hard. And you can see it's filled out all of these imbalances on the way back up, and it's tagged this bearish imbalance here, just like wicked into it before it started to consolidate. Now this has been a really strong move. So if we look at that move from the 14th, so remember what we looked at on the Dixie, you can see the Dixie was pulling back from the 14th, that's where it hit its high, and you can see the ES here has rallied from the 14th. So if we measure that out, you can see that the move that we had on the ES comparatively to the Dixie is about 12%. So almost 3 times the move that we had on the Dixie we had on the ES. And so we have these relative equal highs that we've painted here, and we have this imbalance sitting up here. So again, the question is where is that draw on liquidity going to be? This move's been a really strong one, and this price action here just feels like it's starting to run out of a bit of steam, and the fact that it's just sort of wicked into this imbalance and pulled straight back just speaks maybe a little bit to the weakness of the market at the moment, and that it could be susceptible to a pullback. That being said, that if we can push past these relative equal highs, there's a strong chance we'll wick into this imbalance here, and I think if we could trade up into that zone, that'd be a really strong shorting opportunity. But again, you can see the market's just in this really sort of odd place where it can really go two ways. There's an argument, a good argument for a bullish move up into this imbalance here, but the market does look weak. It could easily give up some of the gains that it's made over the last couple of weeks. So you can see the NASDAQ looks quite similar to the ES. So we had this trading range, which the NASDAQ has really powerfully moved out of. It sort of touched a little bit deeper back into the range before bouncing off. It has actually created a higher high. So the ES didn't do this. So you can see this buy side liquidity here has been taken out in this move, and the NASDAQ's printed a higher high where the ES has not. So it's definitely stronger. It's been a stronger move than the ES. And if we go back and look at that 14th, so you can see that's actually just here. So the move from the 14th to the high is 16%. So that's stronger than what the ES was. It only moved 12%. So you can see that's about a 4 times move from what the DX did from its pullback from the highs. And so where could we trade from here? So again, the NASDAQ's looking a little bit weak here. It's starting to feel like it's run out a bit of steam, but these relative equal highs here look fairly suspect to me, and there's obviously an imbalance here. So it makes sense that that would be a draw to liquidity, and I think if we could push up into there, we would even potentially push up into this second imbalance here and into where this swing low is there. So again, I think if we pushed up into that zone, that would be a really good shorting opportunity. I'd be looking for something in around there, just given that this is, in my view, a bear market rally, and I'm expecting lower prices towards the end of the year. in saying that, there's still a reasonable case here for a long trade. So you can see this move's been quite powerful, and it's printed these bullish imbalances on the way up. There's actually another one in here as well. So these setups are all valid, and you could easily be taking these on the premise that you think this trend's going to continue. Obviously, I think it's probably going to trade up into these zones, but certainly if you were thinking that this was a good long trade, or you'd been long from here, you'd be holding those positions just given that trend is still quite strong. So on to crypto, and we'll start with Bitcoin. So if we look at Bitcoin, a little bit different to what we saw with the ES and the NASDAQ, in that this trading range has sort of persisted for much longer, and you can see this first push that Bitcoin tried to make out of that trading range failed, and it traded back towards the midpoint before coming back out again. It almost failed a second time, and we're now just hovering above this trading range that we've been in since this sort of big pullback in mid-June. So this bearish imbalance here is really doing its work and keeping that downside pressure on the price of Bitcoin, and it just can't seem to break away from this trading range at the moment. It has painted this bullish fair value gap here, and you can see the market did trade into it and bounce away, but really there's just seems to be just too much weight in this bearish fair value gap, and that's keeping price suppressed. And that's not to say that the move off the lows for Bitcoin hasn't been a strong one. It has. It's been about 40%, roughly about 40%. And you can see the move we had from when the Dixie started its pullback here on the sort of 14th, so around here, you can see that move, it was about 22%. So again, the pullback on the Dixie was about 4%, and the move up in Bitcoin from that sort of 14th of July has been over 20%. So that's a 5 times move compared to the Dixie that we had on Bitcoin. So whilst Bitcoin is printing these, higher highs and higher lows, the move just doesn't really feel super convincing. And so again, there's a good case for both a bullish setup and also, for a bearish one. So whilst there's obviously opportunities on lower time frames to be trading this range, if you're looking at a longer term view, if you hadn't gotten set earlier in this pullback, down around this sort of 19,000 mark, I just don't really see a lot of benefit in getting long around this level, as I'm just not convinced we're going to see a push higher. And what would a push higher really need to look like? I'd want to see the market trade up into this imbalance and into this swing low here. So if we could trade up into this level, up into around 28,000, I think that would be, a reasonable push. And if we could push up into that level, I'd be looking at taking some short positions around there. And so if we move on now to Ethereum, so Ethereum, similar to what we saw with the NASDAQ, has been stronger than Bitcoin. You can see it broke out of its trading range much more cleanly than Bitcoin did. It just did it on this first big move, and it never really looked like failing or deviating and coming back into the range. And you can see as it pushed higher, it's created these bullish imbalances on the way up. So that's a really strong signal of a powerful move. You can see it's cleaned up all of these imbalances on the way up, and then it's filled this imbalance here before starting to consolidate around these swing lows here. And so again, if we look at that comparison to the Dixie, you can see this level here from the 13th. If we just trace that out, you can see that move on Ethereum is almost 80%. So that's about 20x what the Dixie has done in terms of its pullback. So again, whilst this move has been much stronger on Ethereum than it has on Bitcoin, you can see that similar to Bitcoin is that it just feels like it's starting to run out of a little bit of steam here, and I think we're at risk of a pullback. So in terms of what I think we could see in the short term, I think we could see Ethereum trading up into this imbalance and potentially taking out these relative equal highs up here, and then trading up into this zone sort of between about 21 and about 2200. So once it would have taken out all of this buy side liquidity here, that'd be a pretty high probability place to start looking for a short position. So markets across the board are a little bit of a mixed bag at the moment. I wouldn't be confident really taking any new positions on here. Obviously, if you had positions on, you just manage them accordingly. But in terms of what I'm looking at in markets, I'm just finding it difficult to find any confluence in terms of trying to take a position either one way or the other. I can see really arguments to go long and short. And from my perspective, when that's the situation, I just tend to take my hands off the wheel because I really want to have real conviction one way or the other, and not to really be able to see a case in the opposite direction to my conviction. As they say, sometimes no decision is actually a decision in itself. And so, as I've sort of touched on earlier in the video, or different parts in the video, is that I think what we're seeing at the moment is a bear market rally, and I think we'll see the market pull back towards the end of the year. What I'm really looking for is a pullback into some key areas in that sort of December period, and that's where I'll really be looking at going in quite hard in particular spot positions, and obviously share that in videos as we get close to it. And so one of the things I'm really going to be looking out for is what the Dixie does, and obviously a spike higher in towards the end of the year I think will be a really strong indicator that that hypothesis that I've been talking about is in the process of playing out, and that'll be our signal that it's the time to go back into a risk on environment, because the Dixie ultimately is really our bellwether as to whether we're in a risk on or risk off environment. So I think if we see a really big push into one of those bearish fair value gaps, into one of those liquidity zones, that'll sort of be the final push higher, and then we'll start to see the Dixie pullback, which will then see money move into those risk assets. And so I think the timing of that's going to be towards the end of the year, and I think that is really going to be a critical time to be starting to look at getting set in long spot positions, and certainly that's what I'm intending to do. So thanks for watching this market update. I hope you enjoyed it. I hope you got something out of it. This is still an evolving format for me. So if you've got any feedback, make sure you leave me a message in the comment section. I try to get back to every single message. And if you enjoyed this video, it would be great if you could like it, because that helps other people to find it. And if you enjoyed this content and you'd like to see more of it, make sure you subscribe to my channel for any future updates. Thanks for watching, and I'll see you in the next video.